welcome to our Introduction to Domestic Production Activities Deduction. My name is Randy Eichhoff, and I am president of Acena Consulting, a CPA, and expert in tax incentives. You know, there's two things we know about tax deadlines. First, you have to pay your taxes regardless of whether you're ready to file your tax return. And second, there's a last-minute scramble by taxpayers to identify one more deduction and one more credit, maybe one that they have missed in the past. Well, the DPAD is one of those deductions that many companies pass over because they think they may not qualify. Now, today I'm speaking to CPAs, business owners, CFOs, controllers, and private equity folks. This may be an opportunity to reduce that tax rate, generate a little bit more money for cash flow to help build the company and grow operations. So today we're going to take a deep dive into the DPAD and see whether or not this is something that your company might qualify for. So the DPAD is 9% of the lesser of qualified production activities income, or taxable income. We calculate the QPI by taking our domestic production gross receipts, or what we call DPGR, subtract out cost of goods sold and other costs to arrive at qualified production activities income. We then multiply that by 9% to come up with our domestic production activities deduction. Now, this is limited to 50% of the allocated W-2 wages as well as taxable income. We define DPGR as receipts from the lease, rental, license, sale, exchange, or other disposition of qualifying production property, or QPP. It also includes receipts from construction activities, architectural, and engineering services. But DPGR does not include receipts from retail food and beverage sales, sale of land, or the transmission or distribution of utilities. Qualifying production property is property that is manufactured, produced, grown, or extracted in whole or in substantial part within the United States, or what we call MPGE. Now, specifically, that includes tangible personal property, sound recordings, computer software, film, construction, utilities, and of course, architectural and engineering services. But what many people don't recognize is it also includes these activities, not just MPGE. If we change the form of property, develop it or improve it, if we process or refine it or make it from scrap, those types of activities can also qualify and generate what we need for that deduction. It includes mining and fishing, as well as agriculture, as well as raising livestock. The activities related to packaging, labeling, installing, repackaging, and minor assembly, however, do not qualify unless they are part of another activity that does include MPGE. And then we may be able to include these activities as part of our analysis and potentially the receipts generated by them. It's important to remember that this must be completed in whole or in significant part within the United States. The taxpayer must retain the benefits and burdens of ownership to qualify. And there is a safe harbor rule, whereby if direct labor and overhead account for 20% or more of the cost of goods sold of QPP, then the receipts generated should flow into our calculation. Now, the statistics published by the IRS show us that the manufacturing sector understands and is taking some good advantage of this particular deduction. What it also shows us is there are some sectors that are really missing out on some significant opportunity here. Those being agriculture. I think professional and technical services is also one that is missing out on some significant opportunity. And you can look down the list and identify those that perhaps should be taking some good advantage here. If you'd like to learn more, we are hosting a free webinar on May 2nd called Understanding the DPAD. We will be kicking off at 10 a.m. Pacific time, and the information available on our website at acenaconsulting.com/webinars. We'll also be hosting free webinars on the R&D tax credit on April 26th and on May 10th. If you have any other questions about the DPAD, please feel free to give me a call. In our next video, we'll be going through the allocation methods that are available to allocate costs to those receipts to come up with that qualified production activities income, or QPI. But in the meantime, feel free to send me an email or give us a call at the office. Thanks again for being here, and I hope to see you at the webinar.